You know you can buy just about anything at Costco. That now includes gold. Costco is now selling 1-ounce gold bars. They're already selling out fast across the country.
Think you could guess the value of this?
3,500.
Jeweler said max too small.
85.
Too small.
This is the serious behind-the-scenes look on what's actually going to happen.
1,000 because it's probably not pure.
100,000. 300.
Like 400, 250,000. It's a heavy-ass bar, man.
350.
We walked in with a bunch of dust.
Put that around your neck in a pendant like this.
Gold has become something that's seen as really special and important, especially for rich and famous people, mainly in places like Miami and New York. I wanted to tell you this because gold is becoming super popular again, especially at this place called CCO, which is really good at marketing stuff. You probably already know that Costco sells pretty much everything, especially in really big quantities. They even sell huge tubs of Nutella, which is a chocolate spread that's not very healthy. They also sell wedding cakes made completely out of cheese, which might sound strange. And don't forget about those famous $150 hot dogs they sell at Costco. But now, the big news is that they started selling gold, and people are going crazy over it.
Speaking of money, listen to this. Costco says it can't keep one item in stock. Big box retailers selling 1-ounce gold bars online for more than $1,900.
These gold bars are only available for purchase on the internet, but something interesting happens. Just a few hours after they become available, Costco runs out of them because so many people want to buy them. That's why Costco has made a rule that each person can only buy 2 of these bars. They're selling these gold bars for exactly $2,000 per ounce, and people are so excited about them that they're saying if they could, they'd buy even more. I've never seen such a strong interest in gold before. Costco is being really smart about this by timing it just right and using clever marketing tactics. So, in today's video, I want to dig deep into this mystery of why everyone is rushing to buy gold, especially from Costco, and whether it's a good idea to invest your hard-earned money in it. I think you're going to learn a lot from this discussion, so let's dive right in. Personally, I've never really paid much attention to gold, and I believe most people from my generation share that sentiment. If anything, I think Bitcoin is what our generation considers as valuable as gold. So, I've never actually owned any gold myself, but I've always been intrigued by how obsessed people can be with it. That's why I decided to delve into the numbers and see if there's any merit to this gold obsession. Before you dismiss gold as a bad investment, which is what I used to think before making this video, let me share some surprising data I uncovered during my research. For instance, when I examined the performance over the past year, I was shocked to discover that gold had gained 15%. I was initially convinced that the stock market must have performed at least as well, if not better. However, the S&P 500, as measured by an ETF called VU, only recorded a 12% increase during the same period. So, there's something interesting going on here. Gold outperformed the stock market over the past year. Part of the explanation for this might be inflation. People were concerned that as the Federal Reserve expanded its balance sheet, it would lead to increased inflation, and that's precisely what happened. To preserve their purchasing power, people decided to allocate some of their funds to gold. That rationale makes sense, but it doesn't account for everything because inflation is a relatively recent development. So I decided to investigate the price of gold before the Federal Reserve injected a massive $4 trillion into the economy, and what I found was even more intriguing. When I looked at a longer time frame of 5 years, I observed that the spot price of gold was $1,200 per ounce in 2018. However, over the next 5 years, it soared to $1,820 per ounce, representing an astounding price growth of 51.2%. This is a remarkably impressive return. Now, let's compare this to the stock market's 5-year growth. During that same time frame, the S&P 500 rose from 2,920 to 4,258, marking a growth of nearly 46%. While this is still a good return, it doesn't quite match the impressive 51.2% growth of gold. As someone who primarily invests in the stock market, this revelation was quite surprising to me. How could gold outperform stocks? Is gold a better investment than the stock market? It's a perplexing question to ponder. If I had some gold to sell you, I might be tempted to say yes, urging you to buy my gold, my precious, and then mysteriously vanish. However, the truth is that gold was not a superior investment compared to stocks over the last 5 years, and here's the eye-opening reason why. When you look at charts of the S&P 500, they often omit my favorite aspect of the stock market, which I affectionately refer to as BDEs, or Big Dividend Energy. Let me explain. This is VIEW, the ETF representing the S&P 500. The chart you typically encounter does not factor in the dividends we receive from our investments. Not every stock pays dividends, so the dividend yield won't appear for all of them. However, some companies within the S&P 500 do pay dividends, and that yield can make a significant difference in the long run. Now, the dividend yield for the S&P 500 may not seem substantial, currently sitting at just 1.56%. Nevertheless, this seemingly small percentage can have a substantial impact over time. The charts of the S&P 500 you commonly find on Google or through your preferred investment app or broker do not take into account the dividends that have been collected over the years. The reason they often exclude dividends from these charts is because not everyone chooses to reinvest the dividends they receive. Some people prefer to use those dividend payments to cover their bills and fund their retirement. Consequently, it wouldn't always be a precise assumption to include dividends in these charts. However, if you want to determine the total overall return, including dividends, you need to examine a different ETF altogether, which is the S&P Total Return ETF, with the ticker symbol SPTR, pronounced SPTR. Let's take a look at the same 5-year time frame, but this time we'll factor in the impact of reinvested dividends to see how much of a difference they would have made. Here's what I found. At the beginning of October 2018, the index was at 5,708 points. Fast forward 5 years, and it's now roughly at 9,184 points. That's a growth of nearly 61%, which is indeed better than gold's return of 51.2%. It's superior not only because the return is higher, but also because reinvesting dividends increases the number of shares you own. It's like making $1 and then having that dollar make another $1, so you now have $2 generating more dollars. And this pattern continues, known as compound interest. In contrast, the amount of gold you held throughout the years remains constant, because gold doesn't pay dividends. Now, why are people flocking to buy gold, especially at a place like Costco? The answer lies in the demographics of Costco's customers and the marketing strategies that tap into their fears, which they often see in the news. People trust Costco. If there were an apocalypse tomorrow, people would probably grab their guns and supplies and then head straight to Costco. That's because Costco's customer base tends to remember what the 1970s and 1980s were like, when interest rates were soaring close to 20% and there was a lot of economic uncertainty. These customers compare those times to the present and are susceptible to advertising that encourages them to buy gold.